Well, I'll jump in here. I think one of the themes that we're going to see play out in 2025, and I echo a lot of Nate's comments, certainly around regulatory clarity sitting here in the U.S. There's a big tailwind right now behind us, which is very well received, and you're already seeing the action in there. But I do think you're going to see greater activity within the TradFi world coming into the crypto space broadly and DeFi specifically.
So in your opinion, why is there a need for enterprise-grade liquid staking, and what are some of the top factors driving the professionalization of liquid staking in general?
Yeah, thanks, David. It's a good question. I think at the heart of it, there's really like two factors that are driving this. One, we're seeing a ton of growth in liquid staking. This is a sector that's grown 300% over the last year in a bear market. So certainly institutions, enterprises are taking note. One of the other pieces is that we're seeing a ton of large entrants come into the space. So we're seeing the likes of BlackRock move forward with ETF applications. And generally a pattern that we see is, these institutions start with an investment in Bitcoin or Ethereum. They learn a little bit about Ethereum, and they know that they can earn rewards by simply staking their assets to secure the network. And so what liquid staking allows these institutions that generally require capital efficiency, they can maintain their liquidity while earning their rewards.
Alrighty, everybody, what is going on? Welcome back to another CYPRX video breakdown. We are entering into an era where we no longer have to sell our digital assets for fiat currency. And instead, we can liquid stake, we can lend, we can borrow, and we can pay ourselves passive income without ever exiting the Web3 ecosystem. Yet most people are still learning from influencers with outdated mindsets. That needs to change. Now is the time to study and educate yourself on DeFi strategies that will be compliant and aligned with regulations. So in today's video breakdown, we're going to be diving into ongoing DeFi developments, showing you all why digital assets like XRP and XDC should be a part of your DeFi strategy in consideration moving forward. So when the regulatory landscape is clear, you are ready to earn with confidence. As you heard that gentleman from Alluvial mention, that liquid staking and that whole entire niche category of the crypto ecosystem is up over 300% within the last year, and that it is gaining institutional traction. I always like to kick these video breakdowns off with people with valid credentials, so that way you guys don't think I'm just giving you guys opinionated hype, and you can actually listen to key market participants in this space. For those of you all who don't know who Alluvial is, they are a major market participant in the space that provides institutional staking capabilities. Here you can see directly on their X profile, it mentions they are proud to announce Alluvial SMS, the unified platform to streamline and scale institutional staking. And then they go on to talk about how Alluvial stake management systems unlock staking for asset managers and institutions. So that perspective that you heard me kick this video breakdown off with to set the tone for today's video is coming directly from an individual with an organization that has valid credentials and works directly with financial institutions. And you heard him mention and talk about institutions gaining interest in learning that digital assets like Ethereum can earn and generate rewards through staking mechanisms and liquid staking mechanisms. So with that being said, this is going to be a very lengthy video breakdown, but one that you're not going to want to miss. We're going to start it off here with the post from crypto.com. Once everyone gets it, it will be too late. I cannot agree more. And I firmly believe that something that they're mentioning here behind the scenes that they didn't directly talk about is DeFi. So we're going to full circle back to this once we go over an ongoing fundamental update that involves crypto.com, but we will come back to that. Coming over here to Carl B. Menger. Don't know who this individual is on X, but shout out to them for this post, because they said here, damn, I bought this coin back in 2013 and I'm down 50%. And they posted a picture of $100 bill. Now, this goes hand in hand with, again, escaping from the outdated mindset that at some point in time in the future, you are going to sell your hard-earned utility digital assets for fiat currency and make it out long-term in this crypto ecosystem, right? We know that at a very rapid pace, year after year, governments, central banks have devalued the value of our fiat currency through inflation and through printing of money.
all of the fiat money in the world is depreciating. Some a little bit and some faster. And if you count all the fiat money and you calculate the depreciation that they have, it's a gigantic value.
With that in mind, again, why on earth would you want to sell your utility digital assets that can be utilized in the Web3 ecosystem, in the DeFi ecosystem, to generate you passive income where you never have to sell your digital assets like XRP or XDC that you work so hard to accumulate, and instead you just take those digital assets, deploy them into DeFi strategies in the future when regulation is aligned, when everything is compliant, and these protocols are battle tested, and just pay yourself passive income if you want fiat, which is going to lead me over here to this post. We're going to go over a couple of different posts where I briefly discussed and talked about some of these strategies. Again, these are just ideas. Okay. These are things that we discuss and talk about in the Wealth 28 Club. So that way we can keep, maintain, and grow our wealth in the future and not have to sell back into the fiat system, which again is something that so many influencers are trying to manipulate you guys to doing when XRP hits $1,000 or something along those lines. Okay. So starting off here, because we're going to go over a couple of these different posts. For example, this one where I mentioned not to sell your XRP for a Lambo, and instead consider this. We'll talk about the strategy here. This is a reply back to Coach JV, where he discussed and talked about a possible profit-taking strategy in the future. And I responded back to that. We're going to go over this one in today's video breakdown. And then we're also going to talk and discuss about some liquid staking features that just became available on digital assets like XDC, where I pretty much said the same exact thing about not selling your XDC and participating in DeFi strategies in order to maintain your position in XDC while earning and generating passive rewards that you can pay yourself for. And if you want, again, swap that into fiat and then go and buy yourself something nice if that floats your boat, right? So we will get into all of these posts in today's video. So as always, showing you guys institutional proof and insights from people in this space who matter, so you guys don't think that I'm just making this all up off the top of my head, all right? Taking you guys back to this first post, because this is going to be the most important one today, where I said here, don't sell the crypto, in this case, the XRP for the Lambo, responding back to Ghost's post on X, where they said, after we get rich, don't get the Lambo to flex on family and friends. Get the Lambo as a constant reminder of how far you've come and as a token of your success. I agree. You want a Lambo, get it for yourself, but understand how to buy it in such a way where you don't have to get rid of your XRP, selling your XRP for fiat to then take that fiat and go buy the Lambo. Keep and maintain your XRP position and buy it with something else, the yield from the XRP, or again, take into consideration the strategy that I mentioned. Instead, consider this. Use the XRP to buy the Lambo and still keep the XRP. Here's an idea how. You become an XRP millionaire, and instead of selling, you liquid stake your XRP for passive yield, then you lend out the staked XRP for even more yield. You borrow against your liquid staked XRP in stablecoins. You buy the Lambo with the borrowed stablecoins. You can even tokenize the Lambo on a real-world yield-generating platform, and you list it for occasional physical rentals under an LLC structure for additional yield. The tokenization yield and rental income then repays the loan. Meanwhile, your XRP earns yield and appreciates in value. And years later, you've still got the XRP in your family bloodline. You've still got the Lambo, and you've built a cash flow business, and you never had to sell your future. Most will not understand this. They will sell, they will flex, they will spend, and they will go broke. Then, so they can get back into the markets, they will beg the system for discounts that may never come. Play the long game, earn, borrow, own, and multiply. CYPRX Wealth 28 Club is different. All right. And again, take into consideration how I started off today's post with this post from crypto.com saying once everyone gets it, it will be too late. This is going to be of key importance as we progress throughout the remainder of today's video breakdown. So why did I discuss and talk about this today? And why is this so important? Well, if we continue to go over, okay, I posted this from Signum Bank, who just confirmed that the DeFi infrastructure is now institutional ready, that tokenized assets, compliant lending, and permission pools are all in place. This is huge confirmation, right? Understanding yield products before they become the norm and positioning yourself ahead of the next wave of adoptions. Institutions may be hesitant, but individuals, they are free to act, they are free to learn, and they are free to build. The rails are laid and the future is being tokenized. Do not wait for Wall Street to teach you DeFi. Learn it before they dominated. This is important because the institutions are coming. Don't take that from me. Take that from a Ripple representative, Jack McDonald, sitting in on this panel discussion that only has 298 views posted from KeyRock, where he specifically says and mentions that institutions are coming to DeFi.
But how does this play in DeFi, and what are the drivers that are going to allow institutions to really engage into financial primitives on chain?
Well, I'll jump in here. I think one of the themes that we're going to see play out in 2025, and I echo a lot of Nate's comments, certainly around regulatory clarity sitting here in the US. There's a big tailwind right now behind us, which is very well received, and you're already seeing the action in there. But I do think you're going to see greater activity within the TradFi world coming into the crypto space broadly and DeFi specifically.
So you just heard Jack McDonald from Ripple that he believes institutions are going to come into this space, and he said into DeFi more specifically. Back to this post from Signum that confirmed that institutional grade infrastructure for DeFi is laid as of time of recording this particular video breakdown. Let's click open and read some of these posts, okay? Because this is going to be important, considering that this post concerns Signum, a direct post from them where they said here, regulated platforms like Coinbase, keep in mind that word, regulated platforms like Coinbase and Maple Finance now offer Bitcoin yield products, potentially more appealing due to clearer regulatory structures and simple risk profiles. Institutions may find Bitcoin yields an easier first step into crypto markets. As we continue over here, it says, meanwhile, yield on Bitcoin holdings is a very interesting avenue for institutions. Products from Coinbase, Maple Finance, and other platforms now offer larger holders the opportunity to earn yield on their positions. They can earn interest by lending their Bitcoin or using it as collateral for on-chain loans, providing these activities are supported by regulated custodians and clear risk controls. This may also be perceived as a less risky and complex option than interacting directly with native DeFi protocols. Most institutional investors are still getting comfortable with crypto as an investable asset class. So the ability to generate yield with Bitcoin, arguably the most credible, seems like a logical extension for those already considering an allocation for treasury or safe haven purposes. Keep in mind that key vocabulary word right there, treasury, right? So you can see this is a post directly from Signum where they're talking about yield strategies. And I dropped the link for you guys as always, so that way you all can go and read this yourselves. This is from June 20th, 2025. And right at the top to kick this article off, it literally says, decentralized finance infrastructure is finally institutional ready. Permission pools, tokenized real world assets, and compliant lending products now exist. So anybody out there that is on the face of the internet that is skeptical about DeFi and the regulatory compliance, that is like, oh, DeFi is not regulated. Well, this is coming directly from a bank from 2025 that just told you compliant lending products now exists. Okay. So you can't ignore this anymore. And people that are ignoring it, influencers the like, and people on X and YouTube with opinions aren't doing enough research, which is why we're doing that research for you guys here at CYPRX to shift the mindset. Stop living in 2021, 2022, FTX collapse, Luna, all these things that happened. I get it. It's created a massive amount of fear in the markets and in people's investment schemes and strategies and perspective, but shift that. We're now in 2025, heading into 2026. Things are changing. Regulation is becoming clear. Compliance is built in, and the infrastructure is laid. Learn DeFi so that way when you're ready, when you're confident enough in your own capabilities to become your own bank, you can generate passive income. You do not want to get caught with your pants down selling for fiat currency, a dead, decaying system, right? That is the most illogical thing to do in my personal opinion. Again, do your research. With that being said, okay, so why is this so important? Well, if we come over here, shout out to CanDAO for this post, because they said here, XRP bros, is it time to stop hating Flare now? If Ripple is posting this, it seems a bit silly for you to go around screaming Flare is trash. And they dropped a link from Hugo Filion talking about XRP staking powered by Flare and TEEs, right? So keeping in mind the posts that I made about not selling your XRP for fiat and instead using your XRP to buy the Lambo by liquid staking your XRP, right? Starting off with that flywheel, well, let's go over to this post directly from Ripple. Keeping in mind, I already showed you guys a Ripple representative, Jack McDonald, saying that he believes institutions are coming and they're specifically coming to DeFi, It's like they're telling you guys this in advance, right? Well, this is from just one day ago. Listen to what Hugo Filion says is going to become readily available for both institutions and retail traders alike.
So Firelight, the staking protocol that is being built on Flare, enables varying degrees of interaction for different parties. So for both individuals and institutions, staking of XRP is available in terms of being able to put your XRP to work in infrastructure. And we'll come on to use cases around that in a moment. But Firelight will also enable institutions to put their XRP to work in quite sophisticated financial products. And that's a kind of separate but interesting and related area. So, as I said, Firelight is powered by Flare.
So that is just such a phenomenal post, right? Directly from Ripple, where they're going on to talk, where Hugo Filion is going on to talk about how institutions and retail traders are going to be able to put their digital assets to work. This is massive confirmation. Now, if we come over here back to a post from Centura from July 22nd, 2025, in this post, I attended this live X space, and roughly at about 35 minutes and 15 seconds, Hugo Filion directly talks and mentions about looping strategies, considering what I mentioned about using XRP to buy your Lambo and not selling it for fiat. Listen here to what Hugo says.
Where do I think, where specifically with regards to XRP, I like the idea of being able to effectively use XRP, or perhaps even more interestingly, staked XRP, staked through Firelight, to be able to borrow stablecoins, then to earn an additional yield on your stablecoins. So what does that look like? That looks like you've taken your XRP, which currently has 0 yield. You have staked it at low risk, staking risk kind of rates. You have received staked XRP. You have then deposited that staked XRP in, let's say, a CDP like platform like Liquidity. You've created a unit of a decentralized stablecoin. You can then put that decentralized stablecoin to work, yield farming. And
so long story short, on this panel discussion, on this X Space Live, right, we had Centura, Firelight, Hugo Filion, and you directly just heard Hugo talk about looping strategies, utilizing and starting with staking or liquid staking your XRP. Same thing that we had discussed and talked about in that post with the Lambo. And now we're seeing Ripple directly post Apex, Hugo Filion talking about staking strategies using XRP. So again, this was from Centura. Why is this so important? Well, if we come over here, keeping in mind I showed you the Signum document, right? Remember, we go back to the Signum document. Here's that Signum document where they confirm the DeFi infrastructure is laid in place. And they talked about Bitcoin yield generation strategies, and this yield generation strategies being incorporated in treasury allocations, right? You can see right down here. Well, what just recently took place? We come over here, Centura just posted this July 29, 2025. Look at this event that took place. Anybody could go and sign up for this. And who was involved? It says Centura's head of lending, Hesso Seppa, joined Caitlin T from Signum at a Crypto Monday event last night to discuss Bitcoin treasury strategies, right? And what else was recently announced? Well, if we come over here, I said, these are the plays that we do not miss. I tagged Mr. Aquaman, and I also tagged one of our other Wealth 28 Club members, Kev, where we are already dialed into this upcoming event. Institutions are not just buying XRP anymore. They are building full-scale strategies around staking and yield generation along with DeFi infrastructure. Into the Block, again, is now titled Centura. So they changed their name from Into the Block to Centura. You can see right here, it mentions on their X profile, right? Centura, previously Into the Block. So Into the Block, a recognized, or I should call them now Centura, a recognized leader in DeFi solutions, and Trident Digital, a renowned digital asset financial services firm, in 2025 announced their merger to form Centura, an institutional DeFi platform combining yield strategies, risk management, and financial services. Centura is preparing a webinar evaluating risks in DeFi, key data and analysis of the risk landscape. And Trident raised $500 million to accumulate XRP and generate yield. And retail is still debating whether to sell for freaking fiat currency. We are here in the Wealth 28 Club studying how smart money plans to hold and earn yield for decades. The future of finance is being built now. Tap in and learn the strategies. And again, I tagged all the credentials from this post so you guys don't think I'm making this stuff up. You can see Trident announces $500 million acquisition to generate yield with XRP. You come over here, you have Into the Block and Trident merged to launch Centaura to create the first compliant institutional DeFi platform for yield. Again, a compliant institutional DeFi platform. And again, who is this? Centaura. They're hosting this event. This is coming up, right? You can see the date, August 13th. So in a couple of days, evaluating risk in DeFi. And this is the same people, Centaura, who sat in on this discussion with Hugo Filion right here, right? You can see Firelight, Hugo Filion, Centaura, where Hugo talked about liquid staking XRP and looping those strategies into stable coins and continuously generating yield.
Looks like you've taken your XRP, which currently has 0 yield. You have staked it at low risk, staking risk kind of rates. You have received staked XRP. You have then deposited that staked XRP in, let's say, a CDP like platform like Liquidity. You've created a unit of a decentralized stablecoin. You can then put that decentralized stablecoin to work.
Well, if we come back over here to the YouTube video that was recently released a day ago directly from Ripple, well, if we go to the end of this, what does Hugo Filion announce at Apex? Take a second here and listen.
Through Firelight on Flare, you'll be able to stake your XRP and earn a yield. Stakers will be able to receive a liquid stake token, which represents their staking position and can be used in DeFi. Staking opportunities span from infrastructure through subjective questions to complex financial products. Risk levels are always at the discretion of the user, and it's always simple to exit back to XRP. And now for something different. So today, I'm thrilled to announce that Flare has set up a definitive strategic partnership between Vivo Power and Flare to deploy $100 million in XRP for institutional yield generation on Flare.
Yes, ladies and gentlemen, and Ripple just posted this video a day ago on their YouTube profile. This cannot be ignored anymore. So think about what I just showed you guys in total. We have $100 million here announced to generate yield through DeFi strategies on XRP from Vivo, right? And over here in this post, I showed you guys this collaboration with Trident and Into the Block to form this organization Centaura that's building out institutional compliant DeFi platforms. They announced a $500 million acquisition to accumulate XRP for yield generation strategies. This is now over $600 million in DeFi TVL that is coming to the XRPL. This is huge, considering that right now the DeFi TVL on the XRPL is only sitting at $85 or $87 million at time of recording this particular video breakdown. This is huge proof that what we said to full circle back into this particular post is coming into fruition and materializing at a very rapid pace. And you do not want to get caught uneducated because you're watching the outdated influencers with hundreds of thousands of followers that are still getting you guys to believe that financial freedom is going to come when you sell your XRP when it reaches $100 or $1,000 or whatever, because I believe in high-end XRP prices for fiat currency. You do not want to sell your XRP for fiat. You want to keep your XRP in your family bloodline through the utilization of these DeFi strategies. And again, it's possible. You just need to learn how. You need to prepare yourself with education, and education does not require that you risk your XRP in order to learn. You can tap into the private CYPRX Wealth 28 Club mentorship, and you can watch hundreds of educational video material in our private community to teach yourself about DeFi, right? And if that does not float your boat, because mentorships are not for everybody, just go out, follow us on X, follow us on YouTube, gather the free information, right? Soak it up, read protocol documents, open white papers, read about different platforms and what they're offering, where the yield come from, where their audits come from, things of that nature. All of that is free to do so. You do not need to risk your XRP to learn, all right? Take into consideration as an example, right? If you come over here to my X profile and one of our most recent posts, what did we do? In the private CYPRX community, we hosted a thorough, in-depth video breakdown right here. I said right here in our honest, in-depth analysis on the newest XRP earn account. This is an hour and 3-minute long video breakdown going into extreme excessive detail, even doing a cybersecurity analysis on this new platform called More Markets that is offering XRP holders the ability to generate yield. And we, in this particular video, discussed that it's not a platform that we are comfortable deploying on right now because there's too many risks involved. All right. So go watch this video breakdown. It's free to do so. And this will educate you all on the opportunities at hand without risking your XRP, so that you have education in your corner and you shift the mindset from outdated fiat currency to holding on to utility assets and paying yourself passive income generating cash flow. Moving on, right? Now heading into the second portion of today's video breakdown. Let's head over to this post. This is again a direct response to Coach JV, where in Coach JV's post, he said here, Rich is taking $300,000 in profit and buying a Lambo. Wealthy is taking that same $300,000 and $150,000, putting it into cash value life insurance, taking $50,000 of that profit into dividend producing assets, taking $50,000 liquid to buy the dip. Again, a dip that they're assuming might come. It may or may not. Who knows? Nobody has a crystal ball in the future. $50,000 also is allocated to self-development. 1 year later, you leverage the life insurance to buy more dividend producing assets, use that cash flow to acquire deflationary assets that appreciate like XRP and Bitcoin. That's again, assuming that a dip or bear market even comes. To what extent, the discounts you might get or may not get, again, that's up for debate. You repeat the process once the ecosystem is built, then and only then you let the bank's money buy the Lambo and your assets pay it off. That's not just a flex, that's wealth mastery. Personally, I disagree with this strategy, Coach JV. Nothing against you. I respect your work, but there's a better way to do this. And so I said here in this post, in this reply back to Coach JV, again, shifting the mindset and never even selling into fiat in the first place, which is how Coach JV's strategy starts off by selling that $300,000. Well, instead of selling your $300,000 out into fiat, this is my reply back to that. Rich, wealthy, but what about the ultra wealthy? Ultra wealthy is doing the same thing that you just mentioned, Coach JV, except starting the flywheel off by staying liquid and lending out that $300,000, say into USDC to earn yield, or RLUSDC as an example, where your $300,000 is earning a percentage, then you borrow against it. And with your borrowed capital, you run the same wealthy strategy that Coach JV just mentioned. However, you are liquid with your original $300,000 and you never have to completely get rid of your original 300K profit. And with using some of the yield or cash flow from the $50,000 that Coach JV mentioned, you can use that to pay back your crypto loan to get your original $300,000 back that was earning an APY the entire time. The bottom line is selling back into fiat is entirely dead. Cash flow is king. Times are changing. DeFi is maturing like XRP, RLUSD. Looping strategies are real and institutional money is already learning about these DeFi looping strategies. So, as always, I like to provide valid proof that that is happening and that what I'm saying is taking place. So here is a video breakdown from just a couple of days ago of Christine Moy from Apollo. Apollo is an asset management firm that has over $500 billion in AUM. And she here is sitting on stage with Galaxy and the likes of other large institutional investors like Oppenheimer, discussing and talking about learning DeFi looping strategies. Take a second here and listen to this.
You clearly, you know, especially in like the crypto native set, like not only do you want to invest and have yield, you want to interact with your investments. You want to, you know, I guess I've been learning about looping and vaulting and like swapping, right? Like you want to get active. And so from my perspective, like.
So that was Christine Moy directly from Apollo, openly confirming on stage that she's learning about DeFi looping strategies and putting your assets to work. Now, a lot of people in the comments underneath of this are yappers talking about where does the yield come from? This is impossible. Why would you risk this? Da, 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 da. They're clearly not doing enough research and they're not looking at the statistics coming directly from RLUSD. Like, go look at RLUSD statistics in the DeFi ecosystem right now. For example, if we come back over here to a recent post from Centaura, keeping in mind everything that I just showed you guys in part 1 of today's video breakdown about Centaura and their involvement with Flare, with Firelight, with XRP yield strategies, with Trident, right? Building out compliant DeFi strategies for institutions, compliant DeFi platforms for institutions. You cannot make this up. And look at what they're posting here. It says, all-time high RLUSD flows on Aave reached a new daily high of $54 million yesterday. This is from July 31st, 2025. As of time of recording this particular video breakdown, it is July 31st. So this is fresh, okay? What is Aave if you don't know? Well, Aave is a lending and borrowing platform. So if you come over here, you can see clear as day that people are already participating in the strategy that I mentioned and talked about in my response to Coach JV, where I said, instead of selling $300,000 in profit and taking that $300K and participating in Coach JV's strategy, well, you take that $300,000, you swap it, say, for example, let's say you make, I don't know, just as, again, an example, $5 million on XRP, right? When XRP goes to some crazy high-end number, and you want to sell $300,000 in profit for fiat to buy yourself something nice. Again, you can sell some of that XRP for $300,000, but turn it into RLUSD. Again, not financial advice. And you can come over here with that RLUSD and you can lend it out on Aave for 8% yield, which is incentivized by Ripple themselves. So if you come over here to the Aave platform, you scroll right down here, you can see RLUSD, right? Where you can lend out your RLUSD. You can see right now there's over $340 million lent out on RLUSD right now. You can see this is the supply side right here. So there's over $340 million being lent out to RLUSD right now. And that $340 million is currently earning 9.72%, which is incentivized directly from Ripple themselves. Here you can see this is a Binance.com post where it says Ripple is giving out RLUSD incentives. As stablecoins become more mainstream, major giants have clearly set their sights on this piece of cake. Ripple has recently been offering incentives for its stablecoin RLUSD. Currently, you can get an incentive increase of 8.86 APY plus a base return of 0.52% APY by using RLUSD to make deposits on Aave, and the incentives are issued in the form of the stablecoin RLUSD itself. So this incentive is coming directly from Ripple. Keeping in mind, Ripple just recently posted a video of Hugo Filion discussing and talking about looping strategies on XRP, which he mentioned on an X space. You can participate in looping strategies, taking your liquid stake token, turning it into stable coins, lending out those stable coins, and continuing to loop and generate more yield. And here you see people with a lot more money than most likely you and I, $340 million of DeFi TVL here on this RLUSD lend out position. This is crazy. This is physical proof that what we're discussing and talking about here in the Wealth 28 Club is where people's focus should be. But for some odd reason, it's not, because people think it's too risky. They think it's never going to become compliant. It's never going to be regulated, and they're missing the point. Keeping in mind how I started off today's video breakdown in the first portion of today's video from crypto.com, where they said here, once everybody gets it, it's going to be too late. So why did I even bring this post up? And why do I think that this is exactly what they're talking about? They're talking about DeFi. Well, if we come over here, shout out to the Mitchell Group for this post. Breaking. Prime Numbers Phi has just inked a contract with Crypto.com's custody solution to fully support PST XDC, which is a liquid stake version of the XDC token, providing liquid staking nodes. This is massive, right? This is a huge upgrade. So I said here to roll over into the XDC portion of today's video breakdown, this changes everything. We are entering into an era again where you never have to sell portions of your digital assets, and in this case, like XDC, for fiat to benefit from them. Thanks to liquid staking protocols like Prime Staking, you can now stake your XDC. And again, I'm not telling you guys to go out there and just wing it and liquid stake on PrimeFi by any means, because I get that there are still risks involved. There's still risks to smart contract breaches and freaking exploits, and the space is still heavily unregulated. But why aren't you learning? Why aren't you going and joining a community? For example, in the private CYPRX Wealth 28 Club, in our Discord, we have mentors that are willing to take the risk for you guys to go out and test these platforms. One of our DeFi mentors, Kev, just recently successfully withdrawed on PrimeFi. He's been going over his wallet integration with what wallet he's using to collaborate with this platform, to integrate into this platform. He's been going over his test amount. He's been going over how much daily passive income he's earning in XDC. He's been going over how long it took to withdraw and all of the trials and tribulations that he's had to go through and his experience with this platform. So that way you don't have to risk your XDC. you can learn directly from a mentor that's willing to take the risk. And this is the benefit of the Wealth 28 Club right here. So anybody that's out there that's like, oh, it's too risky, I agree with you 110%. It is. But that is why we here in the CYPRX Wealth 28 Club community are willing to allocate a portion of our portfolio to this riskier DeFi niche, to video record everything, to show you guys the risks, the trials, the tribulations, the ups, the downs, and the reality of learning DeFi, so that way you don't have to risk your assets. Now, if we come back over here to this post, I said, thanks to liquid staking protocols like Prime Staking, you can now stake your XDC, receive a one-to-one liquid stake token, PS XDC, earn passive yield, which right now is about 7% on your XDC tokens. And I have a lot of XDC. So when this is regulated and everything's solid and firmly put into place, I will gladly be earning 7% on my XDC. And then you can still use your liquid stake token in the DeFi apps. Prime Fi uses Crypto.com's custody, which is a regulated third-party custodian, to securely store XDC, and validator keys offering institutional-grade protection while still giving users a non-custodial experience. We are witnessing the rise of institutional-grade staking and yield loops, where your capital works for you without giving up control. Again, here in the CYPRX Wealth 28 Club, we have been ahead of the curve, educating and preparing our community to ride this wave of innovation. The future is not just about holding crypto, it's about earning, looping, without ever having to sell your utility assets for fiat. You want fiat? Then use your assets like XDC to pay yourself passive income. Again, most people are sleeping. Don't be one of them. And this is in collaboration with Crypto.com, who said, once everyone gets it, it will be too late. If you come over here directly to the documents on Prime Staking, what does it say? Prime Staking and Trust Validator node keys and stake XDC to Crypto.com's custody, which is a regulated third-party custodian that delivers institutional-grade security while preserving the protocol's non-custodial user experience. This is a huge upgrade for XDC holders. Again, I'm not telling you guys to go out there and take the risk now. I agree with anybody that says that the landscape is too risky. But I disagree with anybody that thinks that ignoring your education is the way to move about through this space. You should not be ignoring your education. You should be battle testing these solutions with small amounts of money if you are willing to take the risk. At a minimum, you should be pushing for your education. You should be learning. You should be reading these documents. You should be joining in like-minded communities that are battle testing these. For example, us here in this community are willing to take small portions of our XDC and test these platforms and record the entire process for you guys. Jump on Zoom calls all throughout the week. For example, we have 2 DeFi Zoom calls today alone in the private CYPRX community that are going to be hosted via our DeFi mentors to go over some trials and tribulations that they've recently experienced, some looping strategies that they're currently participating in. So that way our community members can learn from our experience so they don't have to go out and risk their hard-earned capital.
Okay, so if I purchase that, I can get into this strictly through the Decent app or Decent wallet.
Of course, 100%.
Okay, great. Hey, just as an FYI, guys, I did a call with Kev. Well worth the money and the time. It's something, if you're struggling with this kind of stuff, take a couple minutes and do it because it'll help you out. All right, guys?
I appreciate that, Jeff. Thank you.
As always, showing you guys some of the realest information in the game. The last post that I have for you guys to tie all this in, I think is just so crazy considering all the involvement with Centaura in the entirety of today's call. Well, if you come over here, July 29th, XDC Network was involved in this X space here titled Inside XDC, Real Yield, Real Assets, and Real Adoption. And one of the speakers on this panel discussion was Centaura. Centaura, again, is doing what? If we come back over here, they are building out a compliant institutional grade DeFi platform for yield generation with this organization, Trident, who did what? Trident raised $500 million in order to buy XRP for their XRP treasury to generate yield. With everything that I've shown you guys in today's video breakdown, hopefully you all enjoyed. I'm here in an attempt just to show you guys that a lot of people in this space, considering a high influencer count, have outdated mindsets. Not saying that the things that they're posting are bad or negative, because they're not. We're all here in an attempt to make money. But how are you really going to keep, grow, maintain, and expand your wealth in the digital transformation moving forward? And selling into fiat, i.e. backtracking back into the traditional system when everything is moving on chain, and again, my personal opinion, is not a smart idea. So how are you going to defend against that? DeFi is that wave. Just like crypto.com said here, once everyone gets it, it'll be too late. Don't be like everyone else. Tap into your education. Tap in with us here at CYPRX. Again, if you guys want to join the CYPRX Wealth 28 Club, you want to see how we are getting our digital assets working for us, head over to CYPRXtrading.com. We'd love to have you on the team. And if a mentorship program, a private paid community is not for you, then tap into the free resources. If you head over to the CYPRX YouTube, there's an entire playlist titled Yield that is publicly available that has over 60 video breakdowns on yield generation and DeFi related topics in terms of educational video material that we have made in the past that'll teach you about the ongoing DeFi evolution. And if that's not enough, head over to X. You guys have the CYPRX research page that you can follow, and you also have me on X that you guys can follow, where we're dropping hundreds of documents, videos, panel discussions on a daily basis. That is all free information you guys can tap into. With that being said, smash that thumbs up button, help boost the algorithm. We do appreciate the love and the support. Make sure that you're subscribed before you head off, and I will see you guys in the next video breakdown.